The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we got the market getting a little bit slammed today. So after the announcements from Bernanke that, hey, by the way, QE is going to go away. And so some people were apparently surprised by that, I guess. But it's definitely on its way out the door. And he said, but we may not have any of it go out the door. It depends upon how situations are. So he likes to play both sides of this fence. He does a very good job. But a great politician, whatever you want to call him, but he's a politician, and he does a good job at it, I guess. And then, of course, we're looking at Bernanke also being gone as well, and they talked about certain things they are scaling back, certain things they won't buy, certain things they will buy, but whatever it is, it doesn't really matter. It comes down to what's the market doing. Follow the charts. So what do we got? We got the S&P. It is down 27 points on the day, and looking over at the Russell, it's down 19 points, 2%. Just being slammed. Hopped in this morning, did some quick trades, hit my profit targets, done for the day. Got to love it when that happens. Got the NASDAQ down 50 points on the day. We got the Dow down 226 points on the day. Looking on over at oil, it's down $2.87. Almost a 3% drop in oil. So dollar getting a lot of strength and bringing some of those commodities on down with it. You got natural gas is down 2.3% on the day right now. Corn down 5.5%. Soybeans down 18. And let's see, looking on over at euro dollar, it's down 62 pips on the day. And we got Aussie right now moving on down about 100 pips right there. Looking on over at the pound dollar down or up 1 pip, 1 solid pip right there. Looking on over at US CAD, it's up 95. We got dollar franc up 2 whole pips. Euro yen up $1.53. Pound yen up $2.42. US yen up $1.40. We got gold right now down $82. 82. That's right. I said $82. Wow. Right? I mean, wow. 6% move. Silver is down. I just got to make sure I read this right. 8%. Wow. So you gotta love the volatility. Copper is down 2.5%. So the big commodity is just getting slammed. And I mean, it's just one of those things you gotta look at the chart and make sure what you're seeing is real sometimes, because you see it moving so far and you're like, wow, that's just a massive, massive move. And so we got all those pieces put together. What do we do with them? How do we trade them? What could we have been aware of? Well, we knew the Fed funds rate came out. We knew that they said, hey, they're leaving the interest rate where it's at. Well, the only thing they could do is basically make it negative. That wasn't a big surprise. But it's all the QE stuff. So we expect volatility. And the dollar got stronger as people go, oh, wow, QE is going to end. That means the market's going to go down. And so I need to sell my stocks and get into a safe haven like bonds because interest rates are going to go up. It's a little early to do that, but anyways, it'll people are getting into some of those bonds, but those yields should be definitely moving very soon here. And some of the trades I did some premium collection trades on Nadex this morning, and I hopped in. I did some range bound shorting, and I was going in. I was shorting the euro dollar. I was shorting the Russell. I was shorting the NASDAQ. And just one after the other, just bam, 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 one after the other. Very, very simple, very easy trades to do. Pretty fast, because the market was moving so much. But that's just, that's why I love trading on Nadex. If you haven't traded Nadex, by the way, you got to check it out, okay? You definitely need to see this thing. You can get a live account, really fast. It only takes a few minutes for you to get that live account. You can get a demo account in 15 seconds, okay? And I'll show you how to do that right now. Go on over to TFNN.com right now, TFNN.com. Click on the Nadex banner. And once you do that, then go ahead and click on Our Products, then Demo Account. After you've done that step, fill in your username, first name, last name, phone number, and email address. Click apply for demo. They'll give you $25,000 of funding money to play with. They'll also give you a 2-week unlimited access to the demo platform. If you want to get that extended, it's really simple to do. You can email me, dmartin@tfnn.com. I'll be happy to help you out. Let you know there's a person you can contact over there. You can ask Dan, Marissa, whatever. But they'll help you and get that extended for you. Just open up a live account. How much is it to open up a live account? Well, you just got to deposit $100. So click create account, click start, go from literally start to funded in about 5 minutes, and you can start trading. And there's no $25,000 margin requirement like in stocks. Okay, there's you don't have to worry about being assigned a stock or being put a stock or having a stock called away from you like in calls and puts. All risk is capped, unlike naked calls and naked puts and all that. You have capped risk. You don't have to worry about margin calls like on futures and Forex. You get massive leverage. I mean, you're talking about trading Eurodollar for $50 or $100 versus $230 to control like a Eurodollar contract, and your margin doesn't fluctuate. If you trade futures or Forex, you got to put up your margin. Then you got to put up your floating P&L on top of that. So with this, your margin is your margin, and you don't get these intraday. Hey, the market's flying. I don't. Traders out there that you're trading in 2008, you definitely remember these days where the intraday margins have just been increased to this amount, and boom, that amount's taken out of your account. It has to be made available, so they increase in margins because the market was moving so fast. Your margins are never going to be increased intra-trade. They're never being increased, period. You're going to know what they are before you get in because your risk and your margin are the same. If you're risking $50, your margin is 50. If you're risking 80, your margin is 80. If you're risking 1,000, your margin is 1,000. So your risk and your margin are always the same, so therefore there's no margin calls. And you can choose not to get stopped out ever without your margin going up. You can choose to take stops if you want to. You don't have to wait. Okay? I mean, it is a choice. You can exit. And let me see here. Let me get logged in on this. I'll show it to you. And, what I've been doing is I've been using the spread and binary scanner, and I use the binary scanner constantly for my binaries before. I didn't know how much I needed it. I knew I needed it. I knew I wanted it. I knew other traders needed it and wanted it. But it just makes it so easy. And Nadex, I will tell you, in my opinion, is the best way to trade. So, definitely the best way to trade, but it's not the easiest way to trade, okay, on their platform. And so my whole goal has been to make it easier to trade for myself and for other traders. And so basically to make the best way to trade easier to trade. And let me show you this right here. If we go over here, and we got these scanners. And so you can get access to this over on the TFNN site. But sign up for them. We got spread scanner, we now have the binary scanner, and we have a hedge scanner being made right now. So we'll actually show you for futures and Forex how to hedge it and what the risk will be. And it'll be a unique scanner just for hedging. So we're adding in like piece by piece. And once we get that done, we're going to add in a unique stop entry, stop loss, first triggers, OCO orders, things like that into our plugin. And we're going to bring in the working and the open positions right into the scanner. And then once we get done with that, then we're going to tackle the deviations. And we're going to get deviations for 40 futures, something like a couple dozen Forex pairs, and over 3,000 stocks, ETFs, and options. Basically, stocks, ETFs, and indexes. Basically, if they're optionable, we're going to have deviations for them. Because my deviation levels, they don't come from historical volatility. They're not standard deviations. They're not pivots based on yesterday's high, low, open, close, today's open. They are based on implied future expectation of movement, implied volatility that's built into a option. And so I just extract that implied volatility out of 16 options. I average it all together, beta weight it, but based on the month and the gamma and the delta, all these other things that we put together, real complex formulas. Doesn't really matter. We bring into all the complication, all the stats, and then we put it into a bell curve. You've heard of the bell curve, right? You have the probabilities of how far something's going to move, and that's sort of what standard deviation is. But the problem with standard deviation is it's based on the bell curve based on what happened yesterday, whereas implied deviation is based on what is expected to happen today. And so it's how far the market says the market is going to move on any given day. And so we have all these different pieces right here, and we basically tell you this is how far we expect it to move. And we expect usually a 1 deviation day. Today's a big day, so I'm sort of looking forward to pulling up some of these charts with you and running through the deviation levels, because I know we had to definitely bust through a few levels, to say the least, right? So if we go on over here, And let's start out with, we'll just start out with the indices, okay? So on the S&P right now, let's see where we're sitting at. And so on the S&P, we got it down. Look at that, one deviation. So we'll start it out here, move down to half. And look how we just oscillated right here at the first deviation level. And then it dropped down, bam, right there at 0.7. So I spent about an hour and a half there. Boom, dropped right down to 1. And also we had a little range bound between 0.7 and 1. I mean, this is insane. We post these at 8:15 every night. How accurate they are will blow your mind away. It blows me away. I mean, I made it, and I can't, it's, I'm like, wow, it really works that well. But it's based on what other traders are saying. It's based on what all traders combined are saying. So, I mean, it's the ultimate survey. And so we're going down, and then what happens? It's down to the 1.5 deviation level. So basically, if it keeps going, what would be the next level we'd expect? We expect to go 1589. That's the next target profit level. Okay, and I mean that's it. It's that simple. That's what we're doing. So that's the S&P. Let's go on over here. Let's check out natural gas. Okay. So just throw a different one up there because I know it's moved like crazy. Let's see, but it has the expectations built in. All right, so we got it down. We got a half. We got a 0.7. We were actually bounced between like 0.7 and 1. It went like right down to 1 deviation. See that? Came back up to half. Went right back down to 1. Came back up to half. Went right back down to 1. Came back up to half. And actually, it busted and hit 1.5 first, but came back up to half. Right back down to 1, and then now it's sort of edging back down, maybe to that 1.5 level, right there. And so of course, what do we have today? We have the inventory report. So you can always need to be aware of that if you're trading natural gas. So every Thursday, right? So every Thursday we got natural gas inventories. And let me see right here. That came in this morning at 91 billion on expectation of 89 billion. More supply, increased supply. The supply was greater than the expectation. So therefore, more supply, lower price. And price did what it should do. It fell down. Let's see. Let's keep going. Let's look at a couple of the other indices. We'll go look at NASDAQ now. So... and just cover each one of these. But it's fun to see, we see low volatility days, how well it works. It's nice to see how well it works on high volatility days. And what does a deviation mean, by the way? So that's always a good question, right? Well, one deviation is 70% of expected move, or really 68 point whatever percent. But basically 70% expected move. 2 deviations is like 97% of an expected move, and 3 deviations is 99.7% of all expected movement in a given day. All right? So understanding that simple concept and how that works, that it's moving on, down, on, down, on, down, and you see like, okay, so these are expected moves. There's half of the expected move for the day. Pauses, and it likes to pause that half deviation a lot. And a lot of times what it'll do is it'll go to half and then back up to half. But in this case, that trend just keeps continuing. Half, hits the 0.7, pauses, hits the 1, pauses, hits the 1.5, pauses, and we're hitting the 2 right now on NASDAQ, hitting 2 deviations. So stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, welcome everybody back right here to the Diagnostic Trading Hour, and we got Bob from Alaska, or from Colorado.
Colorado,
fishing.
Darrell, I heard you and Tom talking, and I didn't get your conversation, but where were you in Alaska fishing? Out of Skagway?
We're fishing out of Sitka.
Oh, out of Sitka. Oh, okay. I just wanted to know. I'm sorry. And then I got another question, a technical, kind of an analytical or a fundamental question about Freeport McMahon, FCX. What percentages are of gold versus copper do they mine? Do you know?
Oh, I do not know. But I can tell you who would be the person to ask. That would definitely be Tommy.
Yeah.
So right. I wish I could answer that one for you, but I want to make sure I give you the right answer. So sometimes the right answers I don't know.
I listened to your fishing show, but I didn't get to hear where you know, at the very, I just heard the very end, but I've caught a piggyback action where I got 2 fish on at the same time. You know.
Oh, I know. Isn't that the coolest thing?
Another. Oh, that's great.
Yeah, we went out here to Sitka out here. The weather was 65 degrees. It was fantastic.
Oh yeah.
So I mean, you got these pictures on here of these guys, and I got my finally got my camera from my wife. But I mean, these guys are just huge. You know, I mean, there's so many massive fish out there. These aren't even the big ones they're putting on. Here's one big one. Check this out. This guy's like laying down next to the halibut. So, I mean, just some giant whale of a fish. I mean, these things are massive. So, you've been fishing out there. Where have you been out fishing out in Alaska?
Up in Ketchum and stuff.
Okay,
out of Ketchum.
Catch them and catch them, yeah.
and man, let me tell you, you can get some big fish out of there. I mean, I had a friend of mine catch a 600-pound halibut. And,
wow. My goodness. That's a battle and a half.
The most I've caught was a 202-kilo marlin down in Cabo. That's the biggest fish I've caught. Oh, I'm looking at your fish pictures right now. Yeah.
I mean, these fish are just insane.
Oh, yeah. I'd like to I'd like to give you my email and send you an email. You can send me pictures of your fish.
Oh, yeah, we got some. Do it, yeah. Email me, dmartin@tfnn.com.
Okay, I'll get it off Tom's site and stuff and email it. You can send me fishing pictures.
Yeah,
all right.
Sweet, I'll do it.
Darrell, thank you.
Hey, thanks for listening to the show. Appreciate it.
Oh, I love listening to the show.
Thank you.
Bye.
All right, man. You have a great day. Bye. Awesome. Well, I found out there's a lot more fishermen. I mean, I knew there's a lot of fishermen out there. I started talking about doing it, and people were like, I love to fish. It's awesome. So now I got my daughter into it, so that just makes it more fun. And we're working on my son. He's only 9 months old, so we still got to get him up to par. But, pretty soon we can have him holding a fishing pole. So right now it'd be a little scary, put a hook in his hand, and who knows where that thing would go. But definitely have him be a little fisherman too. But she was cute. I got her a fisherman's hat, and I had my fisherman hat, and it was her. We made a big deal about it being her lucky hat because she was catching so many fish, and so it was cool. Good memories, good times. That's what Tommy talked about. I mean, that's what trading's about. Is having you trade. You don't live for trading. You trade for a living. And going out and actually doing things and enjoying things, just that are out there. Let's check it out. We got the Nasdaq. We got the S&P. Let's check out the Russell. So let's see what's going on right there right now. They're all sort of pausing at the moment. We got the Russell right here. Same thing. Down half, 0.7, 1. I mean, look at that. I mean, just perfect targets. Like, you'd think these are fib levels or something, right? But pure stats offered every day on our site. Hop on over here. We got TF, Nasdaq. Let's check out the Dow. It's right on over on the list. I can't wait till we have these on stocks because I know there's a lot of stock traders here on TFNN, so it'll be a really beneficial tool for you. We got 15,050 right there. We go half, 0.7, 1, 1.5, and it's actually pushing on the 2 right now. So we got the Dow pushing down to 14,772 is the next target. And let's go ahead and check out. Let's look at our commodities. Okay, gold. I think we broke the bell. Is my guess. We'll see. We broke that curve. And a little Liberty Bell going on there. Big crack in it. We'll see. Yeah, it broke it. I thought so. It just flew straight down from the 130 close. So, because the gold actually closes at 130 in the pit there. And it just kept... so that sort of threw it off a little bit. You'd almost want to say, like, after the Fed. How far did it go? Because when the Fed happened, it wasn't fair. I mean, it shocked the thing down a whole deviation and a half. So I'm going to measure it from like here when we come back and see how far we are as far as deviations from basically like the reopening of the market, like the 6 o'clock, 5 o'clock reopen time. All right, I'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just looking at different things, looking at gold right now. And what I can see is, we talked about gold moved down about 87 points, 88 points on the day right now. Let's see here, try to check it out. And what I wanted to point out to you was just sort of the expectations of movement, okay, like the 3 deviations. So right here we got like 1, 2, 3 deviations, but it's from the 130, okay, which is right before the Fed funds rate came out. So to sort of give me an idea on expectation of movement, I want to go ahead and draw like 3 deviations down from that price level. And so what I did was I basically added on, we'll get rid of this. Let me get rid of this one, knock it out, we'll get rid of this one, knock it out. And so from that point it brought me down, and look at this, 52 points, we went down 63, so just about 10 points there past 3 deviations from that level. So, which means I should be expecting exhaustion very soon. If I bring it to 52, I should definitely be, expecting it. But, like right up here. So basically I'm just saying that's 3 deviations, that's like 99.7% of expected move. And we basically hit a good chunk of that. We hit like 2 deviations right after the Fed funds rate. So I just wanted to give myself a little more accuracy because of that massive move. Now right here, I can also go in and measure like what is one deviation, and I can draw it down. And so I was actually able to figure out that we're doing 15, we did a 5 deviation move right there. So I can grab this and literally just move it down like right here. So I got basically 16 points for one deviation, and I can grab another one because at each one of these levels we got to have some sort of pause and go in and do it again, and we're basically at that 50 deviation stopping point right now on gold. So we could go to a 6th one, but basically every 16 points I could draw another one. And again, where do you get these deviations at? Let me show that to you. And I'll pull it up. I'll let you see it. You see right here, diagnostic deviation levels. We got the current levels for the day. You can scroll down. You can see gold. Yeah, so 17.3 is an exact deviation for the day. Gold, and so what I do is basically just keep adding 17 points below. So 1322 minus 17.3. I take that number minus 17.3. So on those rare days, those 3% days, that's what you can do. And usually it doesn't happen that often. When it does happen, usually it's something like gold or a limit move on corn on an ag report or something of that sort. If we go over to silver, we're going to see a very similar scenario. See, it just busted through 3 deviations. But if I went and I measured the number, like, okay, here's 3 deviations from, settlement. So I'll measure that number right there. And then I'll take the exact same thing and I'll put it like, basically after the big drop happened and the market reopened back up. And we're basically sitting at 3 deviations right now from looking at about the 6 o'clock to now. We hit 3 deviations on silver. So it's probably done. All right. So they sort of reset their clocks on the 3 deviation whenever it moved that far right after Fed, because nothing happened before Fed funds rate on the metals, which is a good time, by the way, to binary butterfly them going into it. And then to remind you, let's go over, let's check out, I want to check this out real quick and just make sure you understand how to use these deviations. Tighten your trailing stops all the way down. Okay. So if you're placing these trades, when it closes below a deviation level, you want to be tightening your stop. So every time, just tighten it, tighten it, tighten it, as it goes lower and lower and lower. And so we go back to silver. I'll show you the example on silver. But right here, and on this one, let's go ahead and trail it. So let's say we're going short, Fed funds rate, boom, keeps going down, falls. That's great. You got a couple more entries, got another sell right there. We have another sell going on right here. Okay. There's another sell entry there. There's another sell entry right there. There's another sell entry right there. So where am I getting all these sell entries? Am I just picking the great points? No, I do something very simple. Got a low, got a higher low, we break that low. So if I zoom in on that for you, okay, got a low, higher low, and then didn't break it by enough ticks right there. I want 3 ticks, breakout. Didn't break it, boom, breaks it. Now I got a short. Low, higher low, I break that previous bar's low right here. I got a short. Okay, actually this one would have been a little bit closer right there, so because that one definitely broke it. So that's how I'm picking my sell prices. And then where am I trailing where are my stop losses, where am I trailing my stops? Okay, so here, because that's always important, I do 5 ticks above. So 5 ticks above here, and then I'm going to do 5 ticks above the highest point since that dropped. So 5 ticks here, then right here we got 5 ticks here. Then over here we got 5 ticks, or 240. That one probably got stopped out right there, and you got another potential short if you're taking that one. Okay, right there, just move it over again. Let's got both of them like on top of each other. Let's do one more. All right, so that short right there, and then now this has a stop here. Okay. And then, so where are my stops? Where are my stop losses? Okay, my trailing stop. I got my stop losses. I got my entries. Where did I put my stop losses? Each time we close below a deviation level, so right here we close below the 10-minute deviation, then I'm going to tighten my stop up. Let's keep going on down. Go on down here, and closes below the deviation. So this one closes below, so I tighten my stop again. I get new entry, got to stop. This one closes below, so I'm going to tighten my stop again. Okay? Give my room, I mean, it pulls back. I give myself room to let my profits run. Okay? I don't have any risk. I've already tightened that up. So it moves on up, coming on back down. This closes below. All right, so tighten my stop on all my positions. And it keeps going. And 5 ticks above here. Haven't hit it yet. So that, like, basically all these positions are still in. This one got in, got kicked out. This one's in, and we closed below a deviation level. So once you close above, and this is a very important rule, okay? So close below the deviation level. We close above the deviation level without getting stopped out, and then close below it again. We're going to tighten our stop again. So now all the stops on all these trades are down at this point. And you have a little bit of an issue. All right, so we got this one going on. We have, let's see, let's find our next entry here. So that one's like right there. Another entry right here. So this one's, you know, sort of basically break even at this point. This one has just a very small risk on it. Okay. So we got it in, and we just tightened it up just a little bit. But now, where do we put our stop? Because we don't have any more deviation levels. Right? So what we need to do is we can go in, and one, we could add in a half deviation level. All right, so what I'll do is I'll measure it like that. And go, okay, so now let me move this thing down here. And I want to get it exact right now. I'm just sort of doing it, you know, just a quick example for you for the show. So, but let's say 0.265. Let's grab a calculator. Let's get it as exact as we can on this. And let's go over here and go, okay, what is silver's half deviation? 0.26. Okay, so we're pretty close right there. I'm just eyeballing it. So 20.055 minus 0.26. 19.795. Okay, so 19.795. Right in there. Okay. So now that we got that one out of the way, let's check this out. Let's zoom in. And we actually were able to type stops already. That's pretty cool. So right here, we would have tightened this stop by adding that next half deviation line. This bar closes below it. We tightened it, so now we can actually take this. Now we're out. We got kicked out of them. Okay? And one of the things I tell people, and you'll hear this if you go back and listen to my shows, is I say once you get out of a deviation, be very cautious. Okay? Once you get kicked out of a trade, meaning when it closes below deviation and goes back up, if I'm getting that back in another trade, I mean, I'm doing very light risk. I'm not risking as much money as I was on my previous trades because there's a good chance the thing's going to go flat or reverse on me. So all three of those, boom, done, and done. It comes up, and my stop's right here. This gets kicked out. I go in and look at the very next trade, loses. The trade after that is back in profit, and now we move down the stop on it. So let's move that down right here. Okay. And that came up, that just got kicked out, so we had a little short profitable trade on that one. And we're talking about 3.5 deviations at this point. So on this trade we're in, and we're out right about there. Okay? So I'd pretty much say that it's cooked for the day. Plus, of course, silver's now closed. So as far as the pit, I mean, you can still trade electronically, but the main session is done. So usually, unless there's some major announcement like Fed funds rate, you don't expect a lot of activity on silver at this point. And so with that method, we were able to capture, 1, 2, 3 nice big trades And but then we had one loss right here, okay? But it was a small loss comparative to everything else. This position, if you're going to do this next position, definitely would have been looking at making it smaller than what your previous position. So if you're doing like say 2 or 3 contracts or whatever, then maybe just doing like 1 contract after it hits that deviation if you're going to take it. Because again, a lot of times if you look at it, I mean, it really just went flat. We had a little reversal. It pulled back down to about the same price level. It didn't make the same low even yet. And but it's a simple method, and it is very effective. So definitely check that out. Let's go in. Let's look at copper. See how that's doing. And what do we got over here? Settlement, half, 0.7, 1, 1.5, and 2. We're going on down. Right over here. And then it's moving on up. And we got the 0.5, the 7, the 1, 1.5, and then 2 deviations. So I mean, it's a perfect move right across the board. But a perfect move. So we got a perfect 2 deviation, 97% of expected move. When that happens, what should you expect? When you get the 2, and now you can keep trading past 2, but when you get the 2, I mean, that's 97% of expected move in a day. And even though we blew that out on some of the other ones. Okay, so let's check out some of our currencies. Let's see how they held up on the deviations. And, all right, so Aussie dollar, just bam, right there, closed out. But we still got a nice move there. 0.5, 0.7, 1, 1.5, 1, 1.5, 1, just bouncing right there. So we got a good, 70%, almost to 85% of expected movement. But you notice how it really respected each one of those statistical levels. So it's just amazing how these things come together. Now, if you throw fibs on here and Gartleys and all that stuff, it can be really cool because you start seeing the confluence of things coming together. And these are also the points where you should expect a reversal if it's going to happen. So especially when it closes below a level and then violates that close. So notice like right here, like we close below it, we're good, and then we don't close below this level, notice it until here. So let's check that out. Like we close below this level right here, and then look what happens. Then it's flying back up. After it actually hits that stop, it does do a, decent little reversal right there. So of about, I don't know, what was that, 40 pips. So flying on up there on the euro dollar. And let's go ahead and check out pound dollar. And right here, we got pound dollar, settlement 0.5, settlement 0.5, settlement 0.5. Just, bouncing up and down. So pretty flat day for the pound dollar overall. Both having a lot of strength, basically. We go in, let's check out the dollar CAD. So on the dollar CAD over here, load that up. Nice move to 2 deviations. 0.5, 7, 1, 1.5, and 2. So good move there. All right. Sweet. We'll stay right there. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, so doing a wrap-up here. We got Dollar Frank also moved on up to one deviation before turning perfectly back down, and you could say sort of fill in the gap, right? Went on back to settlement price of yesterday, so it's a perfect retracement right there on the Dollar Frank. So go ahead and move that down. Let's check out one more pair. We'll go ahead and look at Dollar Yen and see how the numbers lined up and stacked up. And looks like we got to move on up. We got a nice move on up there. But it moved on up to about 1.5 deviations, right? Check it out. We got settlement, 0.7 right there. Paused for about 30 minutes right there at 1. Moved on up to 1.5, and it's just been oscillating on there ever since. I did get one caller that, or email from a listener wanted to know about trading computers. That's a very important decision whenever you're choosing a trading computer. I mean, we all started out as traders with our little, Best Buy laptops or computers or whatever, and they're fine to a point, but at a certain point, it gets more expensive to have a computer that's not quite meeting up to par, because one crash on a computer in the middle of a trading day can cost you thousands. So I have a very good computer. I use a company called FinEdge. They're pretty sweet. But it's a guy I met actually out in the traders in New York a while back. And he graduated from MIT. Smart guy, but good prices and awesome computers. It's actually a new one. I used to have another one that I got from somebody else, another trading computer company. Was not impressed. And but you can go on over here, and I mean, they got computers starting out like at $1,000, and I mean, they can get as big and bad as you want to. But definitely, I'd recommend checking them out. And I mean, I run a lot of things on my computer. I mean, I got the radio show, I got trade rooms, I got multiple trading platforms open. I do webinars, I do videos, recordings, and like with all these things open right now, you can see I'm still just chugging right along. And without any issues. So it's been really nice because I was having issues before, and I was like, I got to upgrade this thing. And but anyways, they got these lucidity displays. This is the coolest thing. I don't know if y'all seen these before, but they have like 2560 by 1440 resolution, and this is like having 4 monitors in one. And so anyways, just check them out. Like it's easy on your eyes because I mean you can go blind basically. I don't know if you're trading for more than a year, you probably need glasses, and so it can be helpful. But anyways, call them up. And check them out, check out their site, and look for. Just make sure you get a real computer, a stable computer. And so many people are like, well, once I make a fortune, then I'll buy. That's for the pros. And I'm like, well, if you're trying to make money, that's called a profession, okay? So you need to get a real trading computer, whether you get it from them or whoever you get it from. You need to get a trading computer without all the junk on it, without all the crap on it. It's not the one you surf the internet on, and it's not the one you keep up with Facebook on and everything else. It's your trading computer. And yes, we all love the laptops, and fine, have a laptop, but you need a desktop. You get a lot more bang for your buck, and you just need to have. I mean, that's your race car. Okay, you're in a race. You're racing against everybody else. You need a high-speed connection. You need a trading computer. And if you're intraday trading, now if you're just sitting there and you're doing stocks and you're opening a few charts a day and you're logging on for an hour at night, and that's one thing. But if you're in there and you're hitting the markets hard, I mean, one freeze. How much can that cost you? Maybe you don't even lose on the trade. Maybe you just don't get in the trade because you're waiting on the thing to load. And, I used to think, that's just too much. And eventually I was like, it's costing me money either through missed opportunity or through losses. And, there are several companies out there. I've tried a few of them. I just like them. I know they take care of you. And so if you're ever looking for one, check them out. And let's see, what else we got? I want to wrap up on the day right now. We did have the new home sales come in this morning. And they came in, existing home sales, came in better than expected. Philly Fed came in better than expected, but none of that was enough to keep up the markets. And so even with those numbers that came in at 10 a.m., we had the unemployment claims came in higher, and that being a big deal right now with federal and QE and all those other pieces put together. And so moving on down, trail your stops and check out those deviation levels. They can help you, whether you're trading Nadex, futures, forex, whatever. They can help you out. Hope you all have a great day, have a safe day, and I'll see you tomorrow.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.